Let's bring in our next guest who says this proposal, if enacted, could have some unintended consequences. Alan Ratner is a managing director at Zelman and Associates. Alan, what consequences might those be that you're keeping an eye on? Welcome.
Hey, good afternoon. Thanks for having me. I think Diana touched on a lot of the main points, but probably the biggest potential unintended consequences is actually a reduction in housing starts, which is exactly the opposite of what the government is trying to achieve here. You know, Diana mentioned that the institutional investors have really pivoted their business model over the last few years. Previously, they were buying homes off the MLS. Today, they're either buying homes from home builders, they're buying entire communities of homes that were intentionally built for rental. They're buying those from builders, or they're doing the building themselves. So if you restrict these investors from buying these homes from home builders, which is a big if, you know, this very well could be a carve out in whatever bill is passed, if anything is passed. I would expect that segment of the market not necessarily to go back into the for sale piece of the market, but it probably disappears.
And Alan, I'm curious because we know that build for rent is 8% of housing starts at this point. And you talked about some of them, and I did, about building their own homes. American Homes for Rent does. Invitation Homes actually partners with names like Lennar and Taylor Morrison. How would affect those stocks, perhaps?
Yeah, that's right. And the share has come down a little bit in the last couple of quarters. We're actually below 5%, but we were closer to 8 to 9% over the last year or two. There's a lot of different strategies on how these investors acquire the homes. They can either buy one-off from builders. When builders kind of have excess inventory, they might sell to investors, and that's a pretty small piece of the business. They can buy bulk homes, which is also, we believe, a very small piece of the business. And then the third piece of it is these specific communities that are built for rental purposes. And you mentioned that AMH does the development themselves, and they build out the homes themselves. Most other investors will partner with the builder. So the builder will buy the land, they'll identify it as a potential rental community, and then they'll forward sell the community to an investor that will ultimately buy the homes once the community is fully built out.
Kind of to get at what both of you mentioned, Alan, would you recommend people kind of stay away from these stocks for now, or are there any other opportunistic ways to play this as the sands shift out here?
Yeah, if you're talking specifically about home builders, I think there's still far too many questions to answer that. And if we look back at prior bills that have been drafted and obviously didn't really go anywhere, there have been certain carve-outs for new construction. And I think that makes sense from a policy standpoint because by encouraging the building of incremental rental stock, it does add more options for consumers on the rental side, and I think that has kept affordability actually in check in that segment of the market. So we're looking at home building stocks today. They're rallying. I don't know if that's based on some optimism that maybe there's a carve out here. I heard Bill Pulte's interview on CNBC earlier today. It didn't sound like he's advocating for that, but I think that's going to be a very heavily debated topic over the next handful of weeks.
Yeah, and I would say that's probably the builders are doing well because they react to mortgage rates, and mortgage rates are low right now and lower today.